Hello, today is the 14th of October 2010, and we are seeing an interesting divergence or an interesting pattern within the silver market. And what we have now seen is this orange line, which represents the 10-day moving average. It has now risen for 36 consecutive days as of yesterday's close, which it's not that common for that to happen. Usually on a nice bull run, the 10-day moving average would stay rising for 20 or 24 days on a good run, but very rarely over 30. What a rising 10-day average means is that its variable or its level that it has is higher than it was its previous day. And thus, to have 37 consecutive days, it pretty much needs to hold above 22 and change, which means that it's going to happen. And the last time it has been this high would bring us back to 2008, from December the 24th to 2000, December 24th, 2007 to March 20th, 08. It had risen for 37 consecutive days after it already had rallied for 18 consecutive days previous. So it had a very large run up, sort of like we are seeing now. Now, what followed after that move was a big fall. 18 was the level that the 10-day moving average started to decline right in towards here, and that led to the massive sell-off of a 50% retracement. And it took around 30 months for silver to take out that particular high. And the last time before 2008 that it had this big run up is going back to 2006, where silver had 44 consecutive days of its 10-day moving average going higher. Sort of similar to the chart that we're seeing here. Seeing the market go from around 11 and change up to 14. That was a decent sized move, and what followed from that move was a large time correction that made new highs on the next move higher. These are the new highs. The next move was 31 straight days. This was 31 straight days of the 10-day moving average rising, and it ended up taking a big hit. Both of them took big hits, and the 1450 level, this level here, took 9 months to be taken down. And the longest the 10-day moving average was rising before this period would take us all the way back to 1974, when we've seen the 10-day moving average rise for 66 consecutive days in a row. Seeing silver go from around $3 per ounce and then doing better than doubling its value. And what followed after this was a fairly quick sell-off started, and it was not until early 1979 until it was able to take the top off of this market. So therefore, at what number this finishes off at, it's tough to say. It could get to 50 straight days, rising 60, 70, 80, 90, who knows? Right now, the buyers are in full control. However, at some point, there will be a time where the markets will roll over. And the higher it goes, the bigger the rollover is usually going to be. So I'm going to let people know about this now. If you start to notice that this moving average goes flat and turns over, that could mean a substantial retracement of 10, 15, 20%, or having a 9% down day. In fact, it's not uncommon for silver to have double-digit percentage moves, and we're only now starting to see the increased volatility within the market. Thank you for watching and have yourself a great day.